Welcome to Me Financial, the podcast designed to inspire your financial life. Hello, everyone, and welcome to the podcast. I am Michelle Moses, your host, and today we are going to be talking about buying commercial real estate as an investment or for your business and the things that you need to be aware of legally in order to do that. And to talk about that, Mandi Hunter is joining us. Mandy is the founder of Kansas City's first full-service standalone real estate law firm, Hunter Law Group, and recognized several times as an elite super attorney by her peers. Sorry about that pause, guys. Mandy and her team represent their clients in a wide variety of transactions and litigation, primarily in matters involving real estate. Thank you for joining us, Mandy.
Thank you for having me. I'm excited to be here and excited to discuss the real estate market.
Yeah, Mandy knows her stuff, you guys. She is like really killing it in the Kansas City area when it comes to real estate. And I am honored to have her on the show. And she is a good friend of mine from high school. We were actually like best friends. And so we are going to switch gears. We don't normally talk about all of this stuff. And so we are going to be talking business today instead of families and kids and all of that.
Yeah.
Yeah. So thank you. Okay. So can we just get started about commercial real estate? Are we talking, when you talk commercial real estate, is it everything except for land and residential homes?
So typically when people reference commercial real estate, they mean anything that is income generating, anything that you're going to make money off of. So land could be, have a commercial venture to it. Real like residential properties that are investment properties could be a commercial venture. But I mean, that's typically what they mean. I mean, usually I think people would say that it is office space or retail or industrial, but it really, I mean, that's really what it means is that you're going to be making money off of it.
Okay. And I think most people think of it as in, their business, or it's a retail business, office space or a retail business, right? Or you're going to be buying something and then having an office and then renting the other offices to other people too, or,
Correct.
Things like that. Okay. Right. So is there a certain time in your business, this is what I'm very interested in, that it would be more beneficial to buy a commercial property than others? I mean, or is it just more like you just know you're going to be in the same place for a really long time?
Well, I think that there's certain factors that you've got to look at. I mean, one thing that is driving the market right now is the interest rates. So that is, can you afford not just the cost of the building, but whatever the cost of your loan is going to be over the term. The other thing you've got to look at is, what's your cash flow like in your business? Does your cash flow allow you to have extra money for maintenance of the building, for the taxes, for the insurance, anything that you might need? I mean, what if the parking lot needs to be repaired? What if the roof falls in? You've got to think about the cash flow of your business and not be so strapped with your monthly payment plus your interest rates that it wouldn't make sense for you to buy. So, I mean, those are the monetary things that you need to think about. The other thing you got to think about too is, where are you in your business? Do you have, are you in a growth mode where you may not, maybe you're going to double in size in 5 years. And so maybe that is not the time to make an investment of buying a building. Or maybe you're stable and you know that whatever business you're in is going to remain stable. And so you can go out and you can buy the 10,000 square foot warehouse or the 5,000 square foot office building, and you're okay with it because you're going to be in it for the long term. So I think those are just some of the things that you probably need to think about before you buy.
I didn't even think about like the parking lot and all that kind of stuff. So when people come to you and have they already secured financing when they come to you as a lawyer, like you're doing the legal, or do they come to you first, or it just kind of depends?
It just kind of depends. I mean, sometimes, people, remember, I'm also a real estate agent. And so I see both sides. So I've got, as an attorney, usually they have found the building and they want to go through the transaction. On the real estate side with the brokerage, Mandi Hunter Real Estate Advisory Group, People may just be looking for, they may be in the initial stages. So, but if someone comes to us and they're like, hey, I want to put an offer on this building, there's several things to think about. One is, what, what it's part of it is the contract, but then part of it is, okay, is this an old building? Is it a new building? Are there other tenants in the building or are there not? Are you, do you have a lender in place? If not, we can help you get that. Do you need a survey? Depends on where you're at. I mean, a lot of times.
Is a survey an appraisal for a commercial building?
Mm-mm.
Oh, okay.
So a survey is where the people that go out and they stake the ground, and so that determines the boundaries of your building. It's based on legal description. So it's rarely done in residential sales. It's mostly done in commercial sales, and a lot of times commercial lenders require a survey. So you've got to look at, do you have a lender? Do you have a surveyor? Do you need an environmental done? Like like a phase 1 is where they just go out and make sure there's it's basic, just making sure there's no toxins in the ground. A phase 2 goes into additional depth, and then the biggest thing too in a transaction is, do you have a title company? So the title company is really going to guide the process. At least in the Kansas and Missouri markets, a title company really guides the process. So do people have financing when they come to us? Maybe, maybe not. It just kind of depends. And if they don't, we can help them get there.
Okay. And right now, aren't the rates lower for commercial real estate than they are for residential? Or is that not true right now?
You know what? I think they're coming down, but I don't know.
Okay.
I don't know.
I mean, it'll be changed by the time this is released anyway, but a couple months ago they were lower. So I thought that was interesting that there was that incentive.
Know for sure.
Okay.
I mean, I know that I was talking to somebody recently who, was looking at a potential SBA loan and their rates were like 9% the higher the dollar value, the less interest, the less the interest rate is likely going to be. But it's just kind of in a state of flux. So I think it just kind of depends.
So basically with your advisory firm, then somebody could just come to you without anything and just say, hey, I really want to buy a building and I sell, body lotion and I need they're like, hey, building to sell it out of.
Right. I need a 10,000 square foot building to sell my body lotion. I need like two doors, garage doors that go up so we can have trucks back up to it. What can you find me?
Okay. And I'm assuming you help them figure that out too, because some people probably don't even think about like, oh, well, we could just use that you probably go through and say, okay, what kind of deliveries do you get and what kind of customers do you have come and how many people and how much parking and all that kind of stuff.
Correct. Yeah.
Okay.
Yeah. I mean, I think that's, parking is when you're looking at buying something, do you have, how many employees do you have? Do they have to park there? Do you have, is it retail where you've got people coming in and out all the time or not? Cause you see that with the development of some of the older areas now in Kansas City, probably Phoenix is the same way, where parking may be at a premium. And so you have to think about, does the parking fit your needs for your business? I mean, it doesn't do you any good to have a retail space if you don't have parking for people to come in and out. So
right. Well, and then do you help them too, or like, what if they have to build it out? What if it is a retail space and they need to make it pretty inside? Do you help them price that out too? And does that go into, or is that completely separate? Like you buy the building and then there's like a completely separate loan for all the construction costs for the build outs?
So it just depends. So what we do is like we would make introductions to construction companies that would do the build out. But Some banks will wrap up the construction with the building purchase and they will do one loan for both. Some banks will not.
Okay.
So the lending market right now, from what I hear, I mean, I'm not a banker, but from what I hear, the banks have got a lot of construction loans on their books. And so they may be a risk averse bank, may not be inclined to loan additional money on construction right now. So we'll see. I mean, as those start to get paid off, there should be an upswing in banks being willing to do that, but just kind of depends on the bank that you go to.
Right. So it's just kind of shop around, just like any other, any other option. So is there a difference between someone that just wants to invest in a building, like they just want it as like a passive income money maker to be an office space, or, are the paths different if you're just wanting it as an investment versus, to house your business?
Yeah, for sure. Cause like as a, so if you are going to be an owner occupied building, right? So you are going to go out and you're going to buy a building that's going to have your business in it. You are essentially looking at what are you going to pay if you had to lease space, what would your rental rate be there versus what your rate would be on does Phoenix have deeds of trust? Do they have like mortgage notes? Okay. So you're going to look at like, what would it be to rent versus what your payment is going to be for on your loan. And then, so you've got to look at both. So you've got to look at that. In some cases, like right now, the Kansas City market, it seems to be a real drive for 5,000 square foot and under office space. So the rates on those,
which that kind of makes sense now that there's like more work from home and hybrid, that you don't need to house everybody.
Right. So they're reducing. So the smaller office space, I think, is in more demand. So once you lease a space and you've got your TI, your tenant improvement costs, you have to evaluate whether that is going to be the same as what you would pay to buy a building, what that would be to buy your own space. Okay. And so you've got to weigh those two things. Now, an investor has to look at how much money are they making on the building. So an owner, I mean, is going to look at, okay, if I'm paying $10,000 in rent versus $10,000 on my loan, well, I'd rather just, build equity in a building and buy it. Whereas an investor is going to be like, okay, well, you're going to pay $10,000, but I also wanted to make at least 7% or whatever would be, they're hedging their bets against the market, right? Or they're trying to diversify.
And that's what I found so surprising with commercial real estate, was that when you're a retail company, that a lot of times they would charge you a fee or a rent and then a certain percentage of your sales. And then also you're paying for the upgrades inside of it. And I was like, man, I don't know how they even afford to be in these spaces.
Right. So then at that point, which the Kansas City market, I think, is a little bit that way right now. You're like, okay, well, it may not make sense to rent. It may make more sense to try to find something to buy. But again, it depends, like I said in the beginning, it depends on your cash flow. It depends on what type of business you have. Are you stable or are you growing, things like that. But I think from the investor, the investors may be looking for buildings that already have existing tenants.
Right.
They're not going to be using it. And or maybe they are, but they know that they're going to be making, 6, 7, 8, 10%, or at least, on their money. So, so I think that's what the difference between an investor and a buyer.
Okay. And then if somebody comes to you, so let's say somebody like me were to come to your advisory company. And so then what happens? I just say, okay, I'm interested in buying a building. Do you have a fee to go through my business and my needs and all of that? Is there an assessment done, or or is it just kind of, you just talk and then stuff starts rolling?
That's a good question. I mean, really your fee comes from a commission. If from the real estate, like from the real estate brokerage, from that aspect, your fee is going to be from the commission. And so you're just doing what's best for your client based on the needs.
Right.
When people come to the law firm, and they already have the building and we're working on the contract, or, we usually do that on an hourly basis.
Okay. So that kind of is my next segue is, so when you buy a new business or you're buying a new building, what kind of legal things need to be in your contract? Because that always fascinates me because it is so different than anything else I've seen.
Yeah, so I think like one of the biggest things right now, and this just depends on where you're at, like in the country and stuff, but one of the biggest hangups right now is the due diligence. And so your due diligence is typically, you're going to get your title work, you're going to go out and you're going to get your survey, you're going to get your phase one, you're going to get all the documents, you're going to figure out you're going to bring your structural engineer out. You're going to bring out anybody that you need to make sure that this building is going to suit your needs. And I think that I don't know what exactly is driving this, but it's taking a long time in Kansas City. Like your surveys are going to be, it'll take you 6 to 8 weeks to get a surveyor out to the property. And then they've got to do the report after that. So, so the due diligence, a lot of people, they want a fast close. Mm-hmm. They want, they'll say 30, 45 days, and then the buyer doesn't negotiate an extension. And that is really problematic.
So it's really important when you're negotiating in the first place that you need an extension if the due diligence goes long. Okay.
Yeah. Cause your due diligence, realistically, like in the Kansas City market is going to be, I'd say at least 90 days. Mm-hmm. And so, so you've got to be able to have that. I think I see that a lot because you pay all the money, the prospective buyer, they put this building under contract, and then they pay to have the engineer go out. They pay to have the surveyor go out. They pay, so they're spending thousands of dollars to have these professionals go out. And then if they don't have an extension in there,
they just wasted all that money.
Correct. Mm-hmm. Yeah. So because if it's, it does happen where, like, say you get it under contract, but then there's a backup offer that may be better. Maybe it's more enticing for the seller, and a seller that, they may use that legal avenue to get out of the contract so they can take the higher contract.
Right. Yeah. So it really is really different between renting or leasing a space versus buying. Because, once you buy it, really it's all your due diligence and doing all of that negotiating versus if you're leasing, there's this so we could probably do a whole show on that, right? All the little things that you would need to negotiate in a contract.
Yeah. The other thing too that I'm seeing a lot in the Kansas City market in terms of leasing is I don't know why in the last 6 months there's just been a lot of issues with like CAM charges, like the common area maintenance. Those are typically if a tenant is responsible for the common area maintenance, it's they charge it out over the year. Like you pay an estimate, and then at the end of the year it'll be reconciled. And so we've just seen a lot of issues with that. So I just think if you're gonna be entering into a commercial lease with a landlord, you just really need to know what is your responsibility for your payments. You're gonna pay your monthly amount, but then what other types of operating expenses are you gonna be responsible for?
And I've seen some of your posts too, where you're talking about with a lease of, I feel like ways that the landlord can get out of it or something, like the things that would void it that are like surprising, or like people are very surprised at all the little things that are in there that get like snuck in. That I feel like it should always be reviewed by a lawyer, honestly.
Right. Typically, I will say that the contract that is presented by the landlord is probably written in the landlord's favor. So,
Right. Always get a lawyer.
You should always have a lawyer review it. So
Yeah, don't be cheap on that kind of stuff. Okay.
Yeah.
Okay. And then what are some things that you see, like, so if people are buying a commercial property, what are some things that you see people mess up on, or that you see like mistakes? Do they try to do it on their own? I mean, without a lawyer or a bank, or I don't know. What are some of the things that you see?
There are any number of things. I think you're probably right. People that try to avoid the costs, those upfront costs, it is, we're here for a reason. We have a lot of experience for, and we're here to help our clients. I say attorneys we're a helping profession, and that's what we're here for. So I think that not having a transaction properly documented is that can be, because then you're relying on the goodwill of the other side.
Mm-hmm.
And
what do you mean by properly documented? Do you mean like going through a title company so that all the steps are
like even having like a contract that is sufficient? Like what if somebody doesn't pay on time? What if somebody doesn't make their monthly payments? What default provision, what happens if they don't pay? What are you entitled to do? Just anything on, we see lots of issues in our office. And so I think that's one of the things. The other thing too, that I think that is, that I think that even if you do use a real estate agent, I think sometimes tenants and buyers, they're not necessarily accounting for all of the costs associated in their purchase or in their lease, like such as the operating expenses in a lease. What are your CAM charges going to be? Just like I was talking about when you buy, it's the maintenance. The maintenance of if the roof falls in because of a structural issue and you don't have the money to fix it, how are you going to operate? How are your employees going to be there?
Do you usually help them estimate? Do you help them estimate? Is that part of the advisory services that you're helping them estimate what their maintenance costs would be when they buy a building?
Yes.
Okay.
Yes.
I mean, I don't know why you would want to buy a building. I mean, because that's a whole new, we all kind of know about houses because we live in them, right? But commercial real estate is its own beast. And so I can't imagine going into it and just being like, okay, I'll fix the lights and I don't know.
Right.
And not knowing about like asphalt and because there's so many laws that go into place about do you need to have a handicap parking, and there's so many ADA regulations and like laws that pertain to public buildings. Am I right about that?
Right. Yeah. Okay. But remember, there's always your cities are in place with ordinances and things to help you in terms of that. A lot of the commercial areas, at least in Kansas City, they're probably part of a retail association or some type of commercial association that may have some guidelines about it. But you say that, and it is you having to account for the deferred maintenance on a building or for any type of maintenance, that you would do. But it's just like owning a home. Mm-hmm. And when you think about, if you are in a stable spot and your cash flow for your business is good, and you think about, well, am I going to pay a landlord $1 million over the next 10 years? Or instead, you could have purchased a building within that amount of time. You bought a building and then you've got another asset in your portfolio.
Yeah. Yeah. So, I have some clients where they have a retail company and then they own the commercial space. And I'm just bringing them up because I met with them last week, and their commercial buildings, and they're just worth so much. And so it's like, then they can sell the business and that business will now rent back to them the building that they own.
Right.
So the business
Right.
is for sale, but the buildings aren't. And so
Right.
now they're going to go into retirement just making income from those buildings when they just sold the business. And it's just it's genius, you know?
Yeah. Well, yeah. And I think that works really well on a building that has appreciated in value.
Yeah. Location
because-
obviously is, I mean, with real estate, location is a big deal no matter what.
Yeah. And so if you have, but like if you do have a building where, you know, right now I think this is going to be tough because of the interest rates, but if you have a building that, you're seeing this a lot where people who own property and they have a building and they bought it at a cheaper price. Now the rental rates in that area may be so much higher that they can have a holding company rent it to the current tenant, even if it's their existing building or their existing business, you know, and then they can make that, they've got a good margin where they're making some money on it.
Right. Right. Yeah. Because if they've purchased it 10, 15 years ago, and then, yeah,
Correct.
they can kind of transition to that.
Right.
Yeah, I know. It's fun to see all the different ways that people put it together. I think it is anyway. Yeah.
Yeah, it is.
Well, I think it sounds like you have an awesome service. I mean, the advisory, I mean, because it's always intrigued me to buy a commercial building, and I mean, real estate is just intriguing, but the commercial side is, I think, just more daunting, just because, again, it's not in everyone's everyday life besides just going shopping. And so I think it's really cool that you have an advisory service where you could just go and say, hey, I need some help, and show me the way.
Yeah. I mean, that's our goal, is just to be helpful and, you know, kind of figure out what people's needs are. Everybody's needs are different. And just try to meet our clients where they're at and try to help them get to where they want to go.
Yeah. No, I think that sounds great. And so now, and you mentioned before the podcast, now you're looking for a commercial building for yourself. And so I'm just curious, is it hard to find one because you're looking in a certain area and there's only so many in the area of where you're looking?
That's part of it. That's part of it is the area that I want to be in. And the other part is that there's just not a lot on the market right now. Mm-hmm. So I don't know why the Kansas City area is. I don't know what it is with the market, with the commercial market specifically, but there's just not tons. So
well. The interest rates, everything that I'm reading is that the interest rates for all these commercial buildings are going to be adjusting this year. So it will be supposed to be an interesting year. So you never know. You might get a good deal.
Yeah, it will be interesting. And I do think that there's the generation, you know, above us, or maybe a couple generations above us. A lot of them invested in real estate, and a lot of them are going to start, you know, selling because they want the cash. And so I do think we're going to start seeing a shift.
Yeah. Well, good luck. I hope you find a building.
Thanks. I'll keep you posted.
Yeah. Well, thanks for being on. I really learned a lot. I appreciate it. I appreciate you taking the time, because I know how busy you are. And you guys, if you,
anytime, it was fun.
Yeah, and Mandy's information will be in the show notes, you guys. And if you have any questions, just let us know. And if you enjoyed the show, share it with your friends, and be sure to leave us a review. So thank you so much for listening.
Yeah. Go Chiefs.
Yeah. Go Chiefs. Exactly.